Hello, and welcome to our Global Flood Cat product briefing webinar. I'm Olivia Sloan, and I'm the Catastrophe Model Product Manager here at Fathom. The aim of the session today is to provide an overview of our latest product, Global Flood Cat, which we launched 2 weeks ago. I'd like to provide some background information as to how it was developed and also go into detail surrounding several use cases. Our launch webinar last week included reference to the insurance industry, where these types of models have been widely used for the last 30 or so years. However, our focus today and the use cases we will discuss will centre on financial markets and engineering, where we hope this model will provide a great deal of value in terms of understanding flood risk. Fathom was founded with the aim of providing global flood risk intelligence. The release of Global FloodCat means that it joins global terrain data and flood maps in our product offering and completes the foundational jigsaw. In the coming slides, we will delve a little deeper into how complementary these products are and also the advantages of having a model in your flood risk assessment toolbox. We're very excited to have launched this product, and we believe it to be the first of its kind, a global flood catastrophe model featuring all major flood perils, with a comprehensive representation of uncertainty and condition to the current climate. As with all Fathom products, we champion openness and transparency and hope that the release of Global FloodCat will help to set a new standard for this within the market. This is reflected by our commitment to publishing as much of our work as possible in external peer-reviewed journals. So if there's something you'd like to know more about, you can use the links in the chat, or please visit our website where you can find links to our scientific articles. We're aiming to keep this session to around 20 minutes to give you the best value for your time. This means that we won't have a live Q&A session during the webinar. However, please do keep asking questions using the Q&A button, and we will get back to you with answers as soon as possible. As I mentioned in the introduction, Fathom now offers global flood maps and also a global catastrophe model. I'll spend a little time here to emphasize the difference between maps and models and the corresponding move from hazard to risk. Whilst maps and models are distinct products with different applications, they're both extremely useful and can certainly be highly complementary in helping you better understand and assess flood risk and its spatial complexities. Maps are useful for hazard assessment, that is, investigating flood depth corresponding to different frequency and severity flood events. This can be useful for single-point locations to aid visualization of the flood dynamics in local proximity to an asset or a potential asset. The outputs of maps are static, and in this context, they are typically inundation depth by return period. So maps show what gets wet where, but not what gets wet at the same time, and the interdependencies between locations. In this way, maps only answer part of the flood risk question. But what if you want to understand risk accumulation or correlated risk? What if you need to know what impact a flood event could have on your portfolio? This is where models come in. They go further than maps and can be considered the ultimate tool for assessing flood risk. Models enable us to move from understanding hazard, as we can do with maps, to understanding risk, i.e. the relationship between depth and damage. They do this through the use of large stochastic event catalogues and vulnerability functions. In Global FloodCat, we represent close to 10 million synthetic global events spanning a time period of 10,000 years. This catalogue enables us to determine which assets might flood at the same time. In order to translate this depth to loss, the model relies on vulnerability functions, and then provides a vast amount of information about probable loss and also the uncertainty surrounding such losses. Widely used in the insurance industry for many years, these models help us to better understand spatial correlation, i.e. which assets might flood at the same time during the same event. They provide quantitative information regarding financial loss. Some typical output metrics are average annual loss, or AAL. This describes the expected loss per year averaged over many years. Exceedance probability curves, or EP curves, are fully probabilistic loss distributions. These can tell you the likelihood that a loss of a given size or greater will occur in a given year. In the next slide, I will go into a little more detail regarding the fundamental aspects of models and how they translate the relationship between depth and damage. So for those of you not familiar with the structure of a CAT model, this slide should help. A CAT model is a tool which can tell you about risk, not on a single location basis, but across entire regions or even the entire planet. A model enables you to understand portfolio risk across large geographies, but a CAT model is much more complex than flood hazard data. You need to understand spatial correlation and what do the event footprints look like. Then we need to translate those footprints to hazard magnitudes to give an idea of depths of water. This water then needs to interact with exposure data and the global geography of assets. We also need to know how those assets interact with water, linking the hazard information to the likely damage outcome. This means that flood damage can be quantified based on building or risk characteristics. This is a highly complex step in the modelling process, and a key point of uncertainty is related to these vulnerability functions. The final step in the process is translating this damage to economic loss metrics. For example, for insurance, this process takes into account policy terms and certain clauses which impact the losses for the insurer or the entity ceding the risk. Hopefully this slide illustrates just how complex a process it is to build this kind of model on global scales. Now for a couple of slides for those of you not familiar with using these models. You might be wondering, okay, well, what kind of information do I need to provide for the model to analyse my exposure to flood risk? The main input is your portfolio of assets. And what I mean by this is the location, replacement value, and occupancy type. These are the primary assets, but of course, you can improve on this with any additional information you might have. For example, whether the property has a basement or how many stories it has, alongside many other flood-specific inputs such as defences. In terms of outputs, we've touched on this in a previous slide, but again, to highlight it here, the model outputs financial loss metrics. The most widely referred to and useful are exceedance probability curves, average annual loss, and event loss tables. But there are plenty of other loss metrics to explore, and the output can be sliced in many different ways. For example, you can output loss by location, loss by account, or loss by portfolio. You can output loss by coverage if you're interested in the split between buildings, contents, and business interruption, or you can output it any other way that meets your business need. So what is global flood CAT? Flood is a risk everywhere in the world. So to have a tool which enables you to quantify financial risk across all flood perils will be extremely useful. This will enable you to grow in new areas and diversify your portfolio, which will help profitability and future-proofing for your capital needs. If you're already using hazard data and maps, then a model will add to this by helping you to understand risk accumulation and which parts of your portfolio are driving this. It will also help you to critically evaluate your understanding of flood risk and provide intelligence in regions which you might not have covered by your existing software. For me, one of the most exciting aspects of the model is how customizable it is. We have made it as easy to use and customizable as possible, which means that you can apply your view of risk in a systematic way. Having worked in insurance for many years, I know how important the user experience is, and also how interesting it will be for practitioners to be able to plug in their own information. This means you can easily incorporate your own view of risk, whilst relying on a globally consistent framework and the advantage of best-in-class underlying hazard data. So now we move on to a little bit more about the scope and functionality of global flood CAT. A really important point here is that our model is globally consistent while also using the best available local data. This means that if LiDAR data is available in certain regions, it will be incorporated in the maps and therefore also the model. Overall, it is at 1 arc-second resolution, which equates to a minimum of 30 meters, and often better. For example, in data-rich areas where LiDAR is available, this will be more like 10 meters. The model includes all 3 flood perils, so that is river flood, fluvial, flash flooding, pluvial, and also coastal flood. The three major asset types are covered, which are residential, commercial, and industrial, whilst also including buildings, contents, and business interruption coverage for those asset types. If you have detailed information surrounding your assets, then you can also plug that into the model. For example, if you know more about the local defences, then that information can easily be included in your modelling. This will increase the sophistication and accuracy of your model output and tailor it to your exact portfolio. The model can cater for different levels of data quality around the world. So if you don't have detailed information for your exposure, for example, you only have aggregate data in some regions, then the model can deal with that too. The exposure database which underpins the model doesn't just use population density, but rather it contains different spatial distributions for the major asset types. So if you don't know exactly where your assets are, the model will make certain sensible assumptions about where they are likely located. Transparency is a key part of our ethos at Fathom, and this model is no exception. We commit to publishing as much as possible in peer-reviewed journals, and you can even download the hazard and vulnerability data directly from the model. There are plenty of customizable features. In addition to what I mentioned earlier regarding incorporating your own view of defences and vulnerability, you can also choose options to scale the hazard, scale the event losses, or even scale the vulnerability by coverage. Finally, on this slide, we come to uncertainty, which is represented comprehensively within the model. This is extremely important for risk management, as without uncertainty and the spread of losses, the output metrics will not be accurate or useful for decision-making. The OASIS loss modelling framework has a highly detailed and granular approach to Monte Carlo sampling. This facilitates a very good representation of uncertainty and the distribution of losses. So why choose Global Flood CAT? I'd like to discuss some of the other reasons why we consider it such an excellent tool. One reason is that the model is based on best-in-class components. As an example of this, our Global Flood Map, which hopefully you have seen examples of in previous webinars. We've published many papers on this topic, showing how well it validates, and in particular, the underpinning terrain data, FABDEM, which is forests and buildings removed, DEM. This means the model is consistent with our underlying flood maps, so if you use them in conjunction, you'll have a consistent set of information on which to base decisions. Whilst we pride ourselves on our academic research, this isn't solely an academic model. We've spent a considerable amount of time in making sure the model is well validated, and we worked with world-class industry partners on a beta program to do this. One important aspect is that the model is conditioned to the current climate state. Data for event characterization is based on ERA 5, using a 1980 to 2018 epoch. We then used our climate dynamics framework to make adjustments so that the model represents a 2020 level of climate forcing. Future climate will be embedded soon, so watch this space and watch our news in 2025. Finally, a good user experience is also really important to us, and I can say from personal use over the last couple of months, the model is really easy to use. It has a single page of options in order to set up analyses. It's intuitive and easy to customize with a relevant and curated set of options. In fact, in a demo, it takes about 10 minutes to go from input to running the analysis, so you can see how easy that it can be. Moving on to some use cases and real-world applications. As models like this are already widely used in insurance, we'd like to highlight some other industries today, principally financial markets and a brief delve into engineering too. One use case is risk assessment. Now, this can include anyone who is managing a portfolio, looking to either diversify or grow, conduct stress tests, or produce analytics for regulatory reporting. A flood model could be useful for a bank, wanting to explore the impact of flood events on its mortgage portfolio, or it could be useful for real estate managers or corporate risk managers, or even logistics companies wanting to assess the impact a flood might have on its warehouse network. Examples of this may be assessing extreme events, i.e. whether capital reserves are sufficient to cover a loss of a given size in a given region. Global Flood CAT can facilitate this by producing output metrics which detail probable loss and the uncertainty surrounding that for any return period you're interested in, whether that's a 1 in 1,000 tail event or something more frequent. You can also output an event loss table, or ELT. This table lists every single event from the model's catalogue which impacts your portfolio and the associated loss. This would enable you to interrogate which type of events are more material for your exposure and can really help with decision-making and future business planning. The model's outputs can also be used for regulatory reporting and disclosure. As there is increasing scrutiny over business practice, a CAP model can help determine your business's level of financial stability, assess your capital requirements should a loss-making event occur, and demonstrate this to the relevant regulators. Another use case for financial markets is in alternative risk transfer, for example, bonds. This is where Global Flood Cat can add a lot of value and can aid in the pricing, structuring, and issuing of catastrophe bonds for ILS, sovereign and municipal debt, or disaster risk transfer. The model can be used to ascertain the risk profile for bonds, which protect against insured losses resulting from floods. In this way, model output can help potential sponsors understand their global exposure to flood risk and determine the most accurate and appropriate options to transfer this risk to capital markets. The outputs can also be used to provide information to investors and rating agencies. For example, the probability that the portfolio will experience a loss greater than the bond's excess, or the probability that the bond will experience a total loss, or the types of events which are likely to cause a large loss, for example, the location of the event or the magnitude. Modelling can, of course, be carried out whenever useful for yourself. It can be carried out each year or at whichever interval is material for exposure change to impact the portfolio. Now for a use case relevant for the engineers watching. Let's take a look at how the model can be used to support global asset profiling. This can be useful for engineers who either know their assets or are planning asset development. You will know more than us about the defences surrounding a site or the vulnerability of that type of asset to flood damage, and you can fully utilise that knowledge to improve your model results. The results and model output will not only be more accurate and personal to your business, but they will provide a tailored view of risk as close to your reality as possible. For example, this slide shows an area in Thailand, with the markers representing assets or risk locations. You can see that the locations on the left side of the river are inundated during the flood event. Now, whilst you get similar information from a flood map, this image shows just one realisation of what might happen. Given that Global Flood Cat model contains a catalogue of 10 million plausible flood events, it will provide you with statistics and quantitative financial output surrounding this type of event and the myriad type of ways in which many potential flood events in this area could impact your operations. This gives you a detailed view of which assets get wet at the same time, under which types of event, and facilitates a holistic view of how exposed your portfolio is to flood losses. In terms of practicalities, the quick and easy way to access Global Flood Cat is via NASDAQ's Risk Modelling for Catastrophes platform or Moody's Intelligent Risk platform. Of course, if you have capabilities to run OASIS models in-house, we can provide support for on-premise installation. We will also be providing data as a service, so if you'd like us to run the model for you, you will be able to send us your exposure and we can take care of the rest. You'll hopefully be seeing a poll on your screen now, so if you can, please do engage with it. It will be great to discuss the model further with many of you if you have interest or just more questions. Hopefully you've submitted your questions using the Q&A button, but you've still got a few more minutes to do so now if needed. As I mentioned at the beginning, I won't be answering these live now, but I will get in touch with answers to these as soon as possible. We've come to the end of the webinar, and thanks so much for your time. Hopefully it's provided a little more information about Global Flood Cat and how it can help you manage your flood risk. For anyone who'd like more information, we had our launch webinar last week. This was an hour long, so it was more in depth than this session. If you'd like to watch that, there should be a link in the chat which you can head to, or please visit our website where all the links are available. Thanks again for joining and enjoy the rest of your day.